Sup, freaks? This episode was brought to you by our good friends at CrowdHealth. CrowdHealth is here to help you reimagine how you pay your healthcare costs, how you take care of your healthcare. CrowdHealth is not health insurance. It's actually trying to get more and more people to walk away from the health insurance industry because it's an opaque black box where you throw money in. You don't really know what's going on with it. You don't know how your healthcare costs are being negotiated on your behalf by the health insurance companies. You really don't know if you're being taken care of or not. CrowdHealth is here to fix that. What you do when you join CrowdHealth is you join a community of people who are taking care of themselves and who really want to become sovereign with their healthcare. What you do is you become a member and you pay a monthly fee. That fee goes to a dedicated health account, a bank account that you control, that you have visibility into, that you can always take with you at the end of the day if you decide to move away from CrowdHealth. You pay that monthly subscription fee, and then if you ever have a health event, you bring your healthcare bill to the CrowdHealth team. They go to the doctor, negotiate your health expense down to a lower price because they actually work on your behalf as opposed to the insurance companies. And then you pay the first $500 of your healthcare cost, and then it goes out to the CrowdHealth community, and your bill is crowdsourced. To date, they've had 100% of their healthcare bills paid, and it's a beautiful thing. They're also adding a Bitcoin component where a portion of your monthly subscription fee will get put into Bitcoin, so you have your fiat dollars alongside your Bitcoin account. Again, you have access to both at the end of the day if you ever want to walk away from it. But again, it helps you lower your healthcare costs because they're there to negotiate on your behalf. It's a much more personal experience instead of calling a 1-800 number. When you become a CrowdHealth member, you have a dedicated health advocate who is the same person throughout your time with CrowdHealth, who's going to walk you through everything you need to do and make sure that you're getting the best care that you can get that you can possibly get. Go to joincrowdhealth.com/TFTC. The first 1,000 members of the Bitcoin community are going to get, using the code TFTC, are going to get $99 a month for the first 6 months of their healthcare, of their CrowdHealth cost. So go check this out. Me and my family, we use CrowdHealth. We've decided to opt out of the traditional health insurance industry. Again, it's very opaque. I feel like it doesn't really take care of us. So come join us in the CrowdHealth community. Use the code TFTC.
You've had a dynamic where money's become freer than free.
If you talk about a Fed just gone nuts, all the central banks going nuts.
So it's all acting like safe haven.
I believe that in a world where central bankers are tripping over themselves to devalue their currency, Bitcoin wins. In the world of fiat currencies, Bitcoin is the victor.
I mean, that's part of the bull case for Bitcoin.
If you're not paying attention, you probably should be.
Matthew Mežinskis. Of course. I told you I was tired. It's been a long morning already.
I hear that it has, my friend. You gonna manage?
I'm gonna manage.
Period.
I'm gonna manage. You got data specifically created for this podcast, so yeah, I'm gonna manage. I'm gonna have to. I'm gonna learn something new.
We'll get the hardcore charts out early. I wanted to continue where we left off in our quarterly update from Q2, and you asked me about price predictions, which I never give. But then we were talking about running some trend line analysis, which I've done through the years on my site. But also, I thought it was a good time, actually, because this is finally, you may recall, I've talked about this for like a year. I'm finally getting a little chart engine running here with a lot of the data that I've collected over the years. We got the monetary based stuff that we do every quarter, which is pretty good, running through the 50 largest currencies. But I think it's going to be helpful to start doing some YouTube or Rumble, I'm not sure yet, channel videos.
Just do both.
Shortly. Yeah, do both. And give kind of my perspective over the long long scale of a lot of these assets and liabilities are getting out of whack since the global financial crisis and beyond. So it's not going to be just Bitcoin. It's going to be kind of like monetary-based stuff, money supplies, economic stuff, looking at debt, looking at GDP, but maybe in a little bit different way than people are used to. So finally got this little engine built up, and I wanted to give you a little preview on the show here and your listeners, and also we can loop it into our discussions of where Bitcoin's price would be for any price prediction, actually. So let's do it.
Yeah, I love new charts, new data. We're iterating on this quarterly discussion. This is good to see. We're not just getting stale, doing the same old thing. We're venturing into other areas. Price predictions, power trend explainer for Marty. What the hell am I looking at?
So there's been a lot of models about Bitcoin's price over the years. I've posted these. These are very simple throughout the years on my feed. We all know a famous one, stock to flow. A lot of different models that have maybe some worked, some failed, whatever. But without even getting too deep into the technicals and everything, we can do applied statistics. I use this a lot for my work, which doesn't involve crypto at all. You build models and you build a trend line. It's very simple. It's one variable. You don't involve anything else like stock to flow, nothing else. You just look at one thing, and that is price. There's one dependent variable, that is price. The independent variable is just time. And you can take data such as price, run some coefficient calculations to find coefficients that will give you the slope, the y-intercept. It's very simple. You can calculate trend lines from that. 4 types of trend lines: linear, very basic, straight line right across the chart. Then there's 4 that are logarithmic. The 3 that are logarithmic. There are exponential, which most people know that's kind of how the world works: population growth, interest rates. If you look at it, you can run exponential trend lines over markets, stock markets, all the rest. It usually works. R squareds are pretty high. Logarithmic, which mostly works for stuff in nature. Worked for Bitcoin hash rate in early years, really high growth, super high hockey stick at the beginning, and then flattening out. And Bitcoin actually did that in the very early years, was logarithmic, but it's super straight up at the beginning, then levels out. This one actually fits Bitcoin the best today. It's power. It's a power trend line. So there's 4: linear, log, exponential, and power. And power is the best. You don't need to do anything else. It just fits it the best. Nothing fancy, but you got to look at the data and see how it fits it. So let's check it out. Without applied statistics here, right? We don't need to go full classroom. We don't need to explain how I calculate it. It is a power trend, all right, that I'm running. But it's cool because I have a couple different years through Bitcoin's price action to run. Okay, so the first one I'm going to show you is through 2010. I got this data. New Liberty Standard was the best in the early days. There's different ones. Obviously, 2009, we know there really wasn't much data. I started mine from roughly Bitcoin Pizza Day, all right, and May 22nd, 2010, and carried it forward to today. So obviously, 2010 is pretty iffy, but you still have it. You can run a trend line based on, let's say, if I look only at this data stopping December 2010, which is roughly here where the mouse is, all right.
And what price are we looking at for the people who are listening at home?
About 30 cents, 27 cents was Bitcoin in December 2010. So if you go from sub 1 penny, Bitcoin Pizza Day, I think it was 0.00025 cents, something like that, $40 or 30 pounds roughly. I forget which number I even used in my set, but very, very small number, right, per Bitcoin. And then we moved to the end of December 2010. This is a really fast growth, actually, to give us to 30 cents. All right, so I'm going to run this trend for you. I'm going to show you. Boom. It's super high. And if you look at the rest of the price growth based on this trend, we sort of failed this model, right? So Bitcoin was growing really fast on this curve, but it failed. And it's a power trend again. So it's kind of the opposite of exponential. Exponential goes like this, goes higher at the end. Power starts out higher and then it levels out, but it's not as extreme as the logarithmic. Just again, the little basics there. So that's the trend. That's the trend line. And we can even push it out, even though you can't see it on the chart, whether you're listening or watching, because I maxed this chart out at $1 million per Bitcoin. We can extend the trend through this little cursor here and look at it till today. I think this is actually yesterday's data. $833 million of Bitcoin. If Bitcoin had continued the exact same power trend that it was running in 2010, we'd be at $833 million of Bitcoin today. Obviously, we're not there. But that was the trend. All right. Now I'm going to show you the worst. So that was the best trend in Bitcoin's history, like bar none. We didn't quite make it there, but that was the absolute most extreme fast trend. Now I'm going to show you the worst trend, only looking at year ends, of course, but again, from the beginning of 2010, when price started May 2010 till end of 2016, that was the worst trend. Like all the price action during the crypto winter, we just finished crypto winter, get to 2016. This is the worst trend. All right, so I know we got listeners only here, but basically this trend line looks much better. It intersects the price much more. The R squared is 90%. That R squared, by the way, finishes it in 2016. The rest is just extended out. But yeah, it looks much better. The price is above the line. It's below the line.
Currently below it.
Yeah, I'm going to remove 2010 just to clear it up for everybody who's watching. We can take it all the way till today. We are at, as of yesterday, roughly 16,900 as of yesterday. The trend says that we should be at 41,000. So we're under it. All right. Also, we notice here that with this trend, typically it's under a little bit longer than it's over. So the numbers, I haven't run them actually, but it's probably roughly like 2 to 1, two times longer. You're under the trend line and then above it. Usually get the booms, then it might come back down. So that's the trend line. And this is the worst performing trend line in Bitcoin's price history. If you look at the data, you calculate the coefficients, you run a power trend, and you finish in December 2016, which the price is about $1,000. Those who might remember, it's 900 and some bucks, $960 at the end of 2016. You only look at pricing data from Bitcoin Pizza Day in 2010 to 2016, you get this trend, and it actually looks pretty good. And I'll extend this one out. Actually, I won't extend this one out yet. So that's 2016. Now, so I showed you the best, 2010, showed you the worst, literally the worst trend line that Bitcoin has ever run, finishing on an annual basis. It's 2016. Now I will show you the current, which takes all of the whole entire data of Bitcoin. And it's going to come out as a red line. There you see it. And you will notice if you're watching, it is very close to 2016's, but it is above it. So
very slightly.
Even with a crash or whatever that we've had, it's still above it. Of course, every day this chart updates, right? So it gets pulled down. The current trend always changes a little bit. So every day that it's below the current trend, which is, again, the 2016 curve is about 40,000. Our current curve says it should be 45,000, which is the all-time price history action of Bitcoin. So first of all, I think it's pretty interesting that it's still not below, no matter what the FUD is, it's not below the worst year, which was end 2016, end of the crypto winter. That trend extended till today. And also I can say, I'm going to remove 2010 here, but you look at these two, they're actually really close trend lines. I didn't want to plot them all, but if you plotted all the data up till year end 2020 or year end 2019 or year end 2018, they would all be very close to this. So they all kind of get stamped around this trend line. You can draw whatever trend line you want based on whatever time series, like how much time you calculate the prices at. But they all sort of get stamped around this area, and we're not at a low. So that's kind of interesting. And then from here, I'm going to take out 2016 now and look at this is the trend. This is the power trend line. It's a 95% R squared. R squared is a little bit iffy with these logarithmic scales. It just means that the variance of the price around the line, all right, so the way the price moves up or down around the line is 95% better than if we had a line that showed the average and how the price moved around the average. So it's obviously that works much better for linear than logarithmic type scales. But R squared can, as I understand, I'm no stats expert or quant, but it can trick people if you rely on it too much. But nonetheless, you also have to use your eye test in this stuff. And does it look pretty good through the all the years of Bitcoin price? It does. So 95% R squared, 46,000, roughly 46,000 is where the trend line says Bitcoin's price should be now. Obviously, we're about 17,000, so we're under it. But we can still predict it. So here's where we come to the predictions. And you said at the end of our last show, last quarter, I checked it today actually, because you asked when Bitcoin would get back to 60,000, that would be close to the British pound monetary base again, unless of course they're printing more, so it's a little bit higher now. Bitcoin, if it gets about $60,000, would be the size of the British the Bank of England's balance sheet, basically the pound sterling. And as far as market cap goes, and so let's just run this. Let's just look at it. This chart that I made goes out to 2030. Let's see when it would hit it. You actually said, do you remember what you said?
I don't.
I'll tell you, but you said Q3 2024. I love how you gave me the quarterly update as well. So you said Q3 2024. So let's see what the current trend line predicts. We're at 40. I'll remind the listeners, the trend line's about 45,000 now. If we just scroll out and see what it predicts, we're at 50,000 in January 23, 52 in March 2023, May 56,000, June, we're getting pretty close. Already July 2023, the trend line, the current trend line of Bitcoin, which is the best trend line you could draw, predicts $60,000 Bitcoin in July 2023. So actually a year earlier than you thought. But yeah, that's it. And then of course we can extend this even longer. Again, it's just math. There's no stock to flow. There's no weird sort of variables I'm putting in there. It's just price. We extend this out all the way to December of 2030, and we get about a $700,000 Bitcoin. So that's the trend progression. That is the regression analysis using a power trend coefficient set of variables for Bitcoin. It's about 95% R squared thus far. It looks pretty good. And if you did 2016, now I'll go back to the projecting for 20. If you looked at the 2016 trend out in 2030, it would project about $600,000 Bitcoin. So the worst trend Bitcoin's ever drawn would end in the year 2016, end of the crypto winter, and that projects a $600,000 Bitcoin in December 2030. So again, no one knows. Not investment advice. Past performance doesn't equal future results, et cetera, but it's a pretty interesting asset where it hugs these curves. Definitely is not 2010. Oh, this is funny, by the way. If you look at the 2010 curve, we can take it out to 2030. The price projecting $120 billion of Bitcoin.
Let's get back on that trend line.
Yeah, that trend line would be fun, really fun to be on. 120 billion. But we failed that. We pretty much failed it. You can use the eye test to see that we're far away from that one. And all the rest are in between, basically. You can imagine all the other years they're in between. But most are pretty close to the red in the 2016 line. So there it is, man. Little trend line analysis for you. Just wanted to start the show off for you with that.
No, I love this. I've always been averse to these types of charts and price predictions, but they are helpful to help contextualize what's going on right now. And I think that's the main signal I'm taking from this is not the worst bear market that Bitcoin's been through. 2016, 2015, 2014, 2015, beginning of 2016.
Purely based on this, you can say not yet.
Yes.
Might pull it down. But you're going to have a while first, because we're still, the trend line itself is at 46,000. So that's going to have that's going to need many days of, low prices to pull it down, even below the 2016 line. So that's one thing.
Yeah. No, it is crazy how tightly this price chart is hugging the trend lines.
Yeah. Another characteristic of, so this is a power, so this is a log scale. All right. And if it was exponential, as you might know, if it was exponential and I drew a trend line, an exponential trend line, it would be a straight line. That's just how it would look on log scale. This is a power, so it's still curved. It's curved upwards, even though it's log. But if you did log, if you made the x-axis log, this would turn into a straight line. So power trends turn into straight lines on log. And log just looks screwed up. And I apologize for our listeners for my bantering on these charts, but I'll make log on the bottom. So like it's extremely compressed. You look at like January 3rd, 4th, 5th, and it's all the timeline is messed up on my chart. But basically you see that it's turned into log and it's a straight line. Mm-hmm. So that's how a power
Well, and that log chart looks like we're far below where the trend line is.
Yeah, it does.
If you're eyeing a trade, it looks like a good buying opportunity. Again, not financial advice.
That's a good point. I never thought about it quite to look at it that way, but yeah. So a lot of different, I mean, obviously infinite ways you can analyze this stuff, but very simple price predictions. It's only using price. You don't have to use anything else, no other variables. The independent variable is time. The single dependent variable is price. And this is basically the trend line that Bitcoin follows. It's not linear. It's not log even. Log doesn't really fit it. A log trend line. It's not exponential. It's a power series. And those are the 4 types.
Hell yeah.
So that's my applied stats for you.
Well, it'll be fun to keep track of this as we meet quarter in and quarter out.
Yeah, I think it's a good one, actually. I think it's a good one because, I plan on, when I start up some videos, showing the viewers, listeners, all of the different years that it ended, just so you can see. But I can tell you that it's really starting to be consistent around the trend line that we have, which is interesting. Like the last 5, 6, 7 years, even really only a few of the early years, 2010, 2011, were shooting up like kind of in the stratosphere, and just not no reasonable expectation that we'd get back to that trend line. But the other ones stick pretty close.
$180 billion Bitcoin by 2030. It's not out of the realm of possibility. We can get back.
Yep. Nothing to strive for.
No, I think this also provides a great opportunity to dive into. That was one thing I'm really interested to get your perspective on, is obviously right now, if you look at the 2016 trend line and the current trend line, we are more than 50% below where the trend lines, both of them, sit. And obviously a lot is going on since we last met here to talk about the Q2 update. And what do you what's your perspective on everything that's happened with the FTX and Genesis, BlockFi? We're finding out very hard lessons about Bitcoin's truly scarce nature and the product of not respecting that scarcity in applying incumbent financial product models to a Bitcoin world doesn't seem to work.
Yep. I mean, just let's hold off, I guess, on the base money stuff. But regarding FTX, obviously, I've been paying attention a little bit this last weekend. It's been entertaining, to say the least. But I did actually launch this the base money update as the FTX saga was unfolding. So the Bitcoin price was also falling, but it's close back to where it was when I posted it. But it is, first of all, it is still wild to see that. After all of these years, people don't understand the difference between custodied Bitcoin and sovereign Bitcoin, holding your own keys. I mean, that is the lesson and the gift that just keeps on giving. Like, I don't know, man. It's not good to say, but like, because obviously many people just got destroyed and wrecked over this. But I mean, I'm watching this thing unfold, and this just unbelievably woke asshole that's like probably had like, I don't know, silver spoon his whole life, had everything given to him. And I mean, he's just destroyed so many people that didn't need to have anything happen to their savings if they just custody Bitcoin themselves, if they just held their own keys. I mean, it's the lesson that just keeps on giving. I mean, it's just funny to see. I mean, watching these. I mean, again, it would be funny if it wasn't so sad. Like, it is sad. I understand that, but if you're in our headspace and if you're in our sphere, like, you have no need for a company like FTX, and just so many grifters coming out of the woodwork. I mean, I'd like to get your thoughts. I haven't heard actually what you've been saying, but I mean, like Kevin O'Leary, I think stuff's going to come out with him.
Bill Ackman.
Yeah. And like there's a lot of deep state activity. Obviously everybody knows the whole thing with his parents, with Gensler and the econ professor,
from MIT.
Yeah, the father-in-law, not the in-law, but Caroline's father, right? I mean, the connections to be made, like, are so beyond, like, they're so in your face. Like, I don't know how anybody can call us conspiracy theorists with this stuff. I mean, it's just, it's just funny. I mean, it's just so funny because it's completely avoidable. Yet these were the motherfuckers that were trying to create your legislation, be the future of your new finance in the United States. I mean, it's unbelievable. It's unbelievable to see.
It really is. It's like Clown World on crack or on stimulants, like the whole FTX Alameda team was on. But no, I mean,
and Sam,
Matt and I on Rabbit Hole Recap, we've been going back and forth on whether this is just pure greed-driven incentives that drove FTX and Alameda to take undue risk and get blown up as the interest rates got hiked at the Federal Reserve level and they got caught in that liquidity crunch. Or is there something that's I think Matt would agree that's his perspective, or is there something a bit more nefarious to this in terms when you begin to piece together the different data points of the connections between SBF, his parents, Gary Gensler, Caroline, her parents, the Democratic Party, all this stuff. I mean,
Miss Waters.
Yeah.
Did I hear Miss Waters' husband is the ambassador to Bahamas? Is that right?
Yes, that became apparent last week. I don't believe he's the ambassador anymore. However, he was former ambassador. So there's some connections down there. Then you had that whole instance where the Bahaman equivalent of the SEC seized their assets. They're saying they seized their assets, but then like you had all this laundering of FTX's assets into like wrapped Bitcoin on Ethereum, and then they were converting it to Bitcoin, then sending it to a centralized mixer. And it's like, if the Bahaman SEC did seize those assets, why wouldn't they just freeze them? Why are they doing all this cross-chain activity and taking on a lot of slippage throughout that activity too? I think they lost 30% of the value of the assets just by doing all these cockamamie, like cross-chain wrap Bitcoin shit, right, and eating significant losses on those trades, and then sending it to a centralized mixer, not even coin joining. It's all very odd. And then you mentioned Maxine Waters. She came out with a tweet last week and was like, "Hey Sam, it's been great to see you talk publicly about what's happening. Like, it takes a lot of courage, and we'd love to have you on Capitol Hill." And then you had the CFTC coming out and saying this looks like a stereotypical bank run. Probably wasn't due to undue risk. It was caused by a bank run like mania. And it's like, no, this is overt fraud. They were commingling user deposits and trading them on leverage. They didn't have any Bitcoin at the end of the day. They were supposed to have, they had claims of up to 70,000, I think greater than 70,000 Bitcoin on the exchange. And what has come out in the wash with their balance sheet is that they had less than 10 Bitcoin on their balance sheet. It's all fucking weird.
I did want to do my standard soapbox, difference between like what is really reserved Bitcoin, which is versus everything else, which is a claim and commingled. But I'll hold myself up. We should do that a little bit later. But I mean, this whole FTX thing it's just so embarrassing. It's so funny to watch from afar. But again, I know so many people have gotten hurt from it, but I do feel like it's wild because it's absolutely a big blow up. I mean, Enron was what, 50 billion, something like that. I think MF Global, they were a $50 billion fund, but I think the creditors were much smaller than that. I think most of them got most of their money actually at the end of the day. I mean, they said they lost like $1 billion, but this one being 10 billion, it's big. It's absolutely big. But then you look at the rest of the system, which is corrupt and screwed up by regulations coming out of Washington. BlackRock was freezing withdrawals, and they were limiting withdrawals to what, 125 billion in a property fund, which is huge.
Blackstone came out last week too and said they're pausing redemptions on their $69 billion real estate fund.
Oh yeah? Oh, I didn't see that one. Okay, so was that the same one? Is that the same one I saw? No, I saw 125 billion. So there's BlackRock and Blackstone, yeah?
Yes. I know BlackRock for sure was certainly scooping up a lot of real estate during the COVID lockdowns.
Well, and a lot of that stuff, I mean, those guys they've been doing this since post financial crisis. I mean, this is stuff that started to be, scooped up on the cheap, post global financial crisis, 2010, 11, 12. I'm sure a lot of that's been levered up, not able to sold on to new suckers, new investors, and the assets aren't able to sustain higher rates that are coming for the holders. And so, the renters that are paying, they're not covering as much interest as the owners need to pay, because those are obviously huge rental portfolios that they have. But these are big numbers. I mean, much bigger than's happening with FTX. So from that side, the main system is still the big boss. It's corrupt. There's just so many issues there. But with this, man, I mean, it's just so obvious the way that the grifters are kind of trying to go away. Kevin O'Leary is trying to say, I mean, his talking points have just been hilarious before and after. But just everybody just cheering on this woke MIT, I don't know, just spoiled brat, and who was totally going to ruin the Bitcoin and digital asset industry, trying to bring it all under his umbrella. And it was the absolute most corrupt, embarrassing, just clown world shit show that you could possibly imagine. And these were the people that were giving, pointers to Capitol Hill on this legislation. It's unreal. How could this not have a full review, congressional review, hearings, all that stuff to try to get to the bottom of this? I mean, the money is pretty easy to find in Bitcoin land. It's pretty easy to find where it went. So, I mean, I hope people have to answer this, especially the politicians that took his 40 plus 40, because he said he really did, even though he was seen as this Democratic kid, blue blood liberal. He was supposedly giving money dark to Republicans in the same amount. So at least 100 mil, probably.
Super PACs.
Yeah.
That was his excuse.
Which his mother is, right? Working on.
Yeah, she runs one for the Democrats.
Yeah.
No, there's so many smoking guns. How the hell was an FTX subsidiary able to purchase LedgerX, which is a CFTC regulated clearinghouse? They bought another exchange as well, I believe, and it's become apparent that they were running everything through Alameda's bank account at Silvergate. They didn't even have segregated accounts for the two different companies.
He told a Wall Street Journal reporter recently that it was he stumbled. He said at least half, and then the guy's like, half of what? So, well, half of the assets. And he's like, what does that mean? It's at least $5 billion. At least $5 billion was customer deposits that was going directly to Alameda, and then credited on FTX, at least $5 billion, and probably much more. I mean, the amount of stuff that he said on this tour, I couldn't bear to watch the Sorkin interview. I mean, that's like, I hate FTX, or I hate FTX, SBF. I hate Sorkin. I could not even bear to watch that, so I didn't. But I did listen to the shitcoin Twitter one that he did over the weekend. I guess it was kind of over the weekend, my time, end of the week, last week. That was pretty funny. CoffeeZilla dude gets in and questioning him. Did you see his questions?
No.
This guy, I don't even really know. He's a YouTuber, CoffeeZilla.
Yeah, I know of CoffeeZilla.
Yeah, and he got on that channel. He just slid in like on the DMs, said it like, all right, I need to ask some questions, and he was asking the best questions. It was like the worst interview possible by the other guys. Like they were just like so slow and I don't know, trying to be lawyers or whatever. And then he got on another one the next day because SBF had to leave. He basically left after this guy started asking questions. And then he got on the next day on a different stream, just snuck in and started asking him more questions, to which he left, right? SBF left right after these questions. I mean, it was hilarious. But he's just squirming. He can't, like, when his feet are actually put to the fire, I'm like, how could you have possibly commingled at least $5 billion. And where did that money go? Like, is that in congressional budgets right now? Is that in your, parents' massive portfolio and of property around the Bahamas and everywhere else, as we all understand? I mean, it's just outright fraud. It's outright fraud. Like, you can say all you want about banking, and we can talk about that later. It's hard to defend bankers these days, but look, I mean, there are assets and liabilities to match. He wasn't even matching them. I mean, he was basically just full out Ponzi. He was taking the money, spending it somewhere else, and crediting you with a made up synthetic balance on his shitty FTX exchange. And I can't even understand how people. I never liked FTX. I logged in there, traded a little bit. Like, it looks shitty to me. The whole interface looks shitty. Like, all other exchanges that have been around for 10 years look so much better. And you have to question, like, how could it be that this like rising star takes him 3 years to just explode onto the crypto space, all these stadiums, all the rest? Like, does it really work out that way, like, ever? Or is it usually, sweat equity, working hard, like actual, like real work that brings people, success? So usually the latter. Like, it's very rare that you just explode onto the scene with some natural, raw, wunderkind sort of talent that apparently this guy was just endowed with. But obviously he wasn't. Or if he was, and I still think he kind of was in some respects with his kimchi premium trading, which apparently was pretty good.
I don't even believe that.
Well, whatever. Maybe not. But whatever, if he made money in any legitimate way, he's smart enough. He's smart enough to fucking lose it. But so this defense that he say, like, I just didn't know anything, is bumbling. Like, first of all, it's not a defense legally. Again, I'm no lawyer here as well, but everybody knows that ignorance is not a defense in fraudulent criminal activity. Like, you can go to the court and say, hey, no, I didn't know I was supposed to do that. Sorry, I didn't know I wasn't supposed to, just take the money and send it to politicians and spend it on houses. And he invested in like 400 companies that were 100% owned by him. Yeah, by him. I mean,
they were giving out like
never happens.
They were giving out like multi-$100 million loans to themselves.
Yeah, that never would happen in any sort of legitimate fundraise.
I forget if it was
in, Russia and stuff, but it definitely happens in Russia, actually, 100%. I know exactly cases like that, but not in, supposed to be some dynastic, amazing template for the future of crypto regulation in the United States type of a firm. Like, it's so embarrassing. It's so embarrassing. I cannot see how this is. You called it early. I saw a tweet from, I think it was Dylan, who showed some of your early tweets, which I remember seeing. You were calling out SBF like a couple of years ago about his.
It's just, when you listen to him talk,
saying about proof of work and everything else. Yeah,
when you listen to him talk about like Bitcoin and other cryptocurrencies, it became obvious to me. I was like, you don't understand this shit. Like, why? Yeah. Why do people think you're a wonderkind? And yeah, there's so many smoking guns. Like, came out of nowhere. This big lore with the kimchi trade, which again, I'm like, even if the kimchi trade was successful, the work it would take to set that trade up, with setting up all the bank accounts globally, like that just doesn't happen. Like some kid of a lawyer doesn't figure out a way to make that happen without help. So I'm leaning towards like this is a big operation. Like he was put on this pedestal and in this place to, I don't know if it was to create a massive crash to allow the regulatory backlash to seem like a welcome occurrence, or like, so there's another possibility here too, that CZ completely just spoiled the party by seeing the balance sheet and wrecking everything early. Like there's a reality in which I could see they thought this was going to go on longer. He was going to get his templated regulation passed by Congress and take over, and then maybe once that was done, they'd be able to hide all the malfeasance behind the scenes and keep chugging along, kicking the can down the road, and just create like a regulatory hellscape for the rest of the industry. I think that's possible. But yeah, like when you add everything up, the fact that it was obvious to anybody who actually understands Bitcoin and its competitors in the cryptocurrency space that when he was speaking about these things, he didn't really understand them. I mean, in July 2021, he was parroting the electricity use per transaction metric, which is completely bunk. It doesn't make any sense on its face. The marketing to
save the planet by canceling my Bitcoin transaction.
Yeah. Like the marketing budget, like the fact that they're able to get multiple stadiums, get all these commercials, get all these celebrities in such quick order, just stunk. I mean, I did call them out many times. It started in July 2021, and I wasn't really like a FTX SBF sleuth. I wasn't like trying to raise the alarm bells like week in and week out. But whenever he would pop up and talk, I'd be like, how did, like, it was just a bullshit meter going off. Like, how does anybody take this guy seriously?
Right. No, I mean, but that, you put all that together, it seems very, very low probability to me that he was completely incompetent, because you have to have some strategy that is pretty grand if you're gonna have the balls. I don't think you can call it like stupidity, but I mean, like, you gotta. It would take a lot of balls to just go there and run all this stuff if you didn't have some powerful people backing you who knew exactly what they wanted to do with your company, exactly how they wanted it to work. And I think Kevin O'Leary is one of them. I mean, this guy's like, I don't know, the ultimate grifter, as we know. So like, if you're setting up the future of crypto regulation, supposedly in the United States, and your platform is going to like take all of the functions of the TradFi system, you know, from like exchanges to broker dealers to, you know, just on ramping and everything else. I mean, like, I just can't see how you don't have some sort of a pretty wide net of powerful people that are working pretty closely with you, and none of them looked at this just shit show of a balance sheet. Which what's his name? What's the administrator's name? Ray? Is it Ray? I forgot already. The Enron guy that's running it now. Basically,
Ray,
he said
Ray Johnson or something like that.
Yeah, he said it was the worst, you know, operation that he's ever seen, like the worst controls that he's ever seen, and this is from a guy that wound down Enron. I mean, like, I just don't see it, man. I don't see incompetence there. I do see, you know, fuckery and conniving, thievery and fraud and elitism and all the rest. But I don't know, man. I think they were swinging for the fences, but like not just blindly. I think they had to have very connected people, you know, on their side there. And it's amazing to see. It's amazing to see that all these people, I think that they probably thought, you know, these regulators, whoever was involved, this is like their best chance to really, you know, get in on this game where they've been laughing and ignoring, right? as Gandhi said, right, the first few phases so far. And I think they just thought this was their best chance. But how fucking embarrassed must you be, like, to know that, you know, there wasn't even a proper balance sheet in your company that's supposed to be like the new NASDAQ,
the everything app. I really hope this is the case, because then it just proves that those at the top that play these games, the kleptocrats, are getting sloppy. They're getting complacent. They can't even control their puppet anymore.
Yeah.
Like, I think he's going to get away with it. I mean, everything in regards to like the media blitz that's been happening, and Maxine Waters coming out and being like, "Oh, it's okay, Sam. Like you've been doing your best to communicate with the market. We really appreciate that." It's just very transparently like they're trying to brush us under the rug.
Can we be like, and obviously the liberal media didn't catch any of it, didn't do anything. And
New York Times and even the Wall Street Journal are writing puff pieces.
Oh, that's just, it's so embarrassing. It's hilarious. It's embarrassing. You get the shitcoiners on there with their Twitter spaces trying to figure it out. Like, this is just, we have been dealing with this for 10 years already. So from that side, it's just, you know, I'm a caveat emptor guy, like always. And like, it is bad. Everybody, like, you know, even people in the Bitcoin space are like, you know, we do need some more regulation now, some more pointed regulation, all this. Like, it's depressing to hear all of those things, right? And those sentiments are not going away, even with established, you know, long-standing professional Bitcoiners. You know, they're still talking about like how regulations need to be proper and prudent.
Yeah, I'm not sure if you've seen the regulation drama with all the people in the space who want to be the ones who are in the rooms in DC framing the regulation.
I thought that was SBF.
It was
Who else?
It's like Ryan Selkis and
a
bunch of other people. There's some drama I saw over the weekend where DMs were being leaked, and apparently there's some power plays being made in the background on behalf of the industry by a very select few individuals who I would not trust to craft regulation for the space. I mean, if this whole thing proves anything, is that regulation doesn't do shit. These were, the industry
insiders that found it. This is insiders that fixed it. And by the way, it does the same thing that happened to Enron. Enron was brought down by short sellers well before any regulation. And Enron brought in a wrath of regulation. Like, I studied accounting in college, and this was like that was my whole college accounting career, was Sarbanes-Oxley, which was brought in precisely because of Enron fuckery and, you know, telling people to, you know, power down their generators at like odd times of the day, and like not market to market and all these things on their books and all this fuckery. But like, that didn't work before. It hasn't worked after. It won't work in this industry. You know, we had the global financial crisis, obviously, a few years after. It's all about, you know, cheap credit, as we know, for what this kind of stuff that we follow, that causes these cycles. It's well beyond any sort of regulatory environment. And if there is a problem from an actor in the space, it's always going to be sniffed out by the best actors, by the people that can capitalize on it, could short it, or just screw them outright, sell their kind of shorting in a way, as CZ did. It was a power move for sure, what he did. I'm not necessarily saying he's like a champion either of, you know,
no, he's running BNB. BNB is the same fucking scam that FTT is, or was.
No, I know that it is, but at least it's funny that he doesn't like have an official headquarters. He just like moves around the world. Like, he's got, you know, 1,000 different entities. No one really knows. I mean, who knows? He could be involved with China. I mean, who knows?
He came out and denied that over the weekend.
Did he?
Yeah. No involvement with China.
Yeah. But I mean, you know, like, he's an interesting one. He may be the last to go as far as the centralized players go, but you know, but then of course you got the good players. All right, like obviously like let's not talk about Coinbase, but I mean, Jesse, I like Jesse a lot at Kraken. And I mean, I know you got shit coins that you got to trade with to make money on a platform, but look, this caveat emptor stuff, if you want to go on, trade shit coins, whatever, but he at least tells you like it is. He understands, and he's like, look, don't put money on the exchange for me. It's just a liability for me. I heard him say that in an interview in the last week or so. Like, it's just a liability for me, which is true. The only reason crypto exchanges are different than banks, like traditional banks in the United States, with one currency, with the dollar, that have been going on for a couple hundred years or whatever in England as well, modern banking system. It's because you were locked into basically one currency, and your business was in lending. But with crypto exchanges, their fees are not in lending at all. They know how risky it is. They could lend, and they are starting to, which is what happens if you're going to stake some Bitcoin or stake some USDC or whatever other shitcoin. Then that is for sure a lending operation. But at least that's transparent. But other than that, they're not lending it out. I mean, they obviously we knew what happened with Mt. Gox, lost the coins and lost the cold storage access, Mark did, and all the rest. There's some hacks and problems there in the past, but most of these exchanges are not going to do that for sure, and they're not making any money on it. The only money that they're making is from trading shitcoins. So that's a completely different business model than has ever existed from a prior bank. So that's still kind of working its way out. I think like it's working its way through the system. Like we've just never seen something like an exchange that that actually holds custody of assets and could lose those assets, as FTX did, or steal those assets outright. But the good ones, even the good ones like Kraken, I mean, look, it's just caveat emptor. Like, don't put your money there. You don't need to put your money there. If you want to trade a little bit, or if you want to try to get some alpha, I mean, be my guest, but it's going to be harder and harder as this stuff continues to get flushed out. And you just don't need to do it. Even the best will tell you, Jesse Powell tells you, it's just a liability. I'm not making any money on storage fees or anything else for Bitcoin. They may have to do that in the future with more regulatory costs that come on to their, into their platforms and their operations. But the only money they make is from trading shitcoins. The only money they make is from you basically losing your Bitcoin to other shitcoins. That's the only money that exchanges make. They do not make money storing your Bitcoin.
You need to internalize this, freaks. I'm sure many of the people listening to this already have internalized this. And then even if, I mean, you mentioned the lending side of things, that we've seen Celsius, BlockFi go down. I mean, I think lending Bitcoin, rehypothecating it, and lending it out to people is just critically insane, clinically insane, considering the price volatility that exists in the space. I mean, even Genesis, DCG, is getting dragged into this mess.
What interest rate is it worth it to you, Marty, to lend your Bitcoin out?
I don't know if there is one, because I mean, you could say like 20%, but like, what does that mean? Like, yeah, 20% is appealing, but how do they get that 20%? They give it to somebody.
I would say like 40. I would say like 40%, and then because even there, like the risk.
The higher it gets,
I know.
The higher it gets, like the worse it seems, because
it reflects more risk. It reflects more risk, obviously, the higher it gets, and that there is a volatility quotient in that calculation for sure. But yeah, the risk of losing your principal is just too high to me. Losing your principal is the main thing. I mean, like if you lose your if whether it's someone. Here's the thing: when the Bitcoin is being lent out, it's not really being lent out in the real economy. It's just from people going to shitcoin speculate, right? Like hedge funds and traders. Like, it's not like people are really, like hardware store down the street is taking a Bitcoin loan because it needs, a Bitcoin loan. Like, it's the people that are borrowing it are speculating the hell out of it.
Yeah, it's literally a more buttoned up, prototypical Twitter scam bot. Give me 1 Bitcoin, I'll give you back 1.5. That's essentially what it is. The scammers are at least more overt, where the lending yield chasers are, they try to put on more of a professional face and say, hey, you can trust us with your Bitcoin. But at the end of the day, it's, again, considering the stage we're at in Bitcoin's monetization phase and the uncertainty that exists in shitcoin world, like you never know what's going to happen with these shitcoins. And like you mentioned, that's what the Bitcoin's being lent out to do, is to trade those. You can have one actor like CZ come out of nowhere and completely bork one of these chains.
wreck your entire exchange and liquidity providers and market makers and everybody that's on there. I mean, just so many people got wrecked on this exchange. And it was interesting to see. I mean, again, it was sad to see, but some of the hedge funds are on there, people that, you know.
It's Sequoia writing puff pieces. Like, it's really, come on, people.
These people, how do you invest that much money, hundreds of millions, into these jokers? And again, I don't know. This is where, again, I get confused. Not to dwell too much on our prior conversation, but like, there's something different going on there.
Yeah,
I heard a Yusko interview not long ago, and he said, you know, he remembers the MF Global one, and that was like, or no, I guess it was Madoff, which one was he mentioned, but it's like, you know, within 24 hours, Madoff was in handcuffs. Yes, that was onshore. Within 24 hours, he was in handcuffs. And I mean, like, that didn't happen to Mežinskis. That didn't happen to, you know, some of these other big ICO blowups or centralized clearing blowups, and it didn't happen to SBF. Obviously, he's in the Bahamas, but I mean, the fuckery that must be going on with the Bahamian regulators and financial insiders there, clearly connected to, you know, big players in the U.S. I don't know if he gets off, it will be. It's just like a there you go moment. I mean, never trust. Why would you ever trust these guys? Why would you ever trust? This was the motherfucker that was going to be planning your cryptocurrency legislation.
Just look at him. All you had to do is look at him. I'm a pretty left side of the bell curve grunt. My BS meter, I just have to look at somebody. I'm like, no, this ghoul. He literally looks ghoulish.
Yeah. I mean, and this tour, what do you think about this tour that he's doing, though? I mean, he looks so bad, so dumb. He's not even giving real answers. Again, I could not watch the Sorkin interview. I would not
subject yourself to that.
Refuse to watch it. But the Twitter Spaces one was a little bit more manageable, you know, just washing dishes or whatever, doing something, you can listen to that. But like, you listen to this guy, just every word coming out of his gross mouth is probably, you know, just
stinks.
You know,
I could smell it from here.
Yeah, just took some drugs and had a big pot of spaghetti, you know, from an unwashed plate. Like, I mean, this guy, like, is just like, how could you possibly trust this motherfucker? But, you know, he's going around like still kind of getting these puff pieces, glowing reviews, and I mean, he's lost $10 billion.
Yeah, well, he's personally lost $27 billion, so that's part of the puff pieces. He's not a multi-deca billionaire anymore. He's only got $100,000 in the bank account. He lost everything. He's hurting too.
I mean, he doesn't answer any questions. The CoffeeZilla questions were funny. I would encourage you to listen to those. I think he did a standalone video actually today of those two interviews. But like, no one will hold his feet to the fire on these interviews. Even the shitcoin guys that were trying to.
Well, the shitcoin guys are fucking idiots.
Yeah, well,
I mean, they should be getting drilled too, because I've done a little research into their histories. They're chronic shitcoin pumpers. And
which ones?
That Mario Narwhal guy or whatever the fuck his name is.
Yeah. Is he?
Yeah.
So, well, if you got .eth, doesn't he have .eth in his handle? And if you got
yeah,
.eth
probably.
in your handle, then. But yeah, a lot of those guys. I mean, there's cross currents everywhere with some of these.
Yeah.
Some of these guys. You definitely got to be careful.
Everyone's a scammer. We live in the all-time high clown world. It only seems to be climbing higher every day. I mean, in this whole situation, a lot of people want to, he certainly deserves considerable amount of blame, but again, this is like Weimar vibes. Like everybody thought that they were going to put their Bitcoin into this casino, ride the shitcoin pumps, become immensely rich, get out, be smarter than everybody else. And I think it's a product of the age that we live in, where people want a free ride, people want easy money. There's no concept of hard work. It's very hard to find these days, and nobody wants to take personal responsibility. Like we've been mentioning, this could be completely avoided if you took the extreme ownership over your Bitcoin that you should be taking and holding your own keys. We have been sitting on the sidelines feeling bad for people, but also laughing. I'm not going to lie, there's been a lot of schadenfreude coming from my end. Like, fucking told you so. We've been screaming on our platforms for years now, half a decade on this end, saying, hey, just if you're going to buy Bitcoin on exchange, buy it on exchange and put it in your own wallet, secure your wallet, and sleep happy. Get some peace of mind.
Yeah. I mean, just if you want to keep funds there to trade or shitcoin or whatever, I mean, minimal, like the maximum amount of your wealth should not, there's no reason. Jesse Powell himself will tell you there's no reason to keep it on an exchange. And again, for him, it's just a liability. Your money on his exchange is just a liability, something to possibly lose. The only way he makes money from you is trading shitcoins.
And most of you motherfuckers are not going to be good traders. I'm like 99% of people who trade lose money. So you may think you're gonna
that's what I
trade the
was
market.
going to ask is like even the OG like good trading enterprises, let's say like BitMEX, all of the conflicting signals. You had BitMEX. They try to take out BitMEX, and then like the next week or maybe 2 weeks after, when the NYDFS like started their injunction, started their process with BitMEX a couple years ago. Like the next week, Kraken got their banking license. Now, granted, that was like Wyoming, so it's a different jurisdiction. Wasn't like the same. It wasn't a pure oxymoronic sort of sequence of events that it would have been if it was someone in New York. But then you got what happens with obviously plenty of other shitcoin enterprises. Like some seem to be okay, some not, and then obviously this one with FTX, they were a favored bunch. They were the favored ones as well. So it's completely arbitrary who your regulators are going to work with. There's nothing magical about being regulated. There's nothing magical about having your Bitcoin on this exchange. Like you have to do the work. You have to do it yourself. And it's another thing. I'm listening to some of these. So I'm listening to Simon Dixon in particular, who was on the call. I don't know what you think about him. Like he's been around.
He's a shitcoiner.
Yeah. I mean, he's got his Banks of the Future platform, which, it's been around, but maybe a bit more like TradFi kind of straddling, but still definitely leveraging a lot of the shitcoin space. But he's using these words that this is now starting brief soapbox moment, which I usually do about the free banking stuff. Like he's using words like commingling of funds, which Sam was doing. And they did get him to say that he was commingling funds on Alameda. But the stuff about, he would then go in to talk about, they would talk about spot versus margin. Like if you had, spot versus margin, if those funds were commingled, if it was fully backed. And you see this in, it doesn't matter who we're talking about, FTX, crypto banking, crypto exchanges. They always use things like one-to-one, phrases like one-to-one or fully backed or proof of reserves. All of this shit drives me nuts because no one understands that you are literally not addressing the main problem. And the main problem is that you should fucking custody yourself, your own Bitcoin. Like that is the problem in this financial system. The problem is, there's not enough self-custody. You're putting too much trust in these motherfuckers that are regulated in just stupid and self-interested and conflicting ways. So that's the problem. And all this stuff about commingling. So the Alameda stuff is blatant fraud, and that's true. Like that's absolutely fraud. That would never happen even in a fairly reputable, normal Wall Street bank. I mean, you're just not going to like take money that you raise from investors, take money that you raise from customers, and have it in a separate company, invested in your own separate companies. Like no one knows where it is. Buy yourself some property, all the rest. That's absolutely fraud. Like that's Ponzi scheme level fraud. That is commingling of funds, meaning you have it like in a completely different. It's actually not the word commingle. It's just like taking the funds and spending them. It's Ponzi scheme stuff. But this word about commingling, and like if it's a difference between spot and futures, and if you have Bitcoin exchange, where's the actual Bitcoin versus synthetic stuff that I see on my dashboard? All that shit, all of it from like 1,000 years ago till today is the same. It's just a claim. It's a ledger entry. It's someone that someone created for you. Yes, if you're a proper business, you will match your assets with your liabilities. Banks do it. It's not, there's no drawer with your name in it when you take a Federal Reserve note and put it into the bank. It's actually impossible to do that. That's why banks do commingle funds. Like there's no drawer with your name, with your funds sitting in a bank vault. It's not. It's money's fungible, which is actually a unfortunate phrase that SBF's trying to been using. He's like, dollars are fungible. Dollars are fungible. He talks about how they fucking lost. He keeps saying dollars are fungible. I heard of these stupid interviews. But all of these motherfuckers, they don't like dollars are fungible, commingling, proof of reserves, all these things. At the end of the day, it all means the exact same thing. It means you have your money in custody ran by a fiduciary. So what they give you is not the real thing at all. What they give you is called fiduciary media. It's fiduciary media. You log on to Kraken, Bitfinex, whatever you see on the screen. I have 0.5 Bitcoin, 1 Bitcoin, whatever it is. That is definitely not your Bitcoin. We all know not your keys, not your Bitcoin. It's definitely not your Bitcoin, but it is something. So what is it? Well, those exchanges do have their assets matched with their liabilities. They have Bitcoin in their cold storage and some in hot storage and hot wallets. But what they are showing you is not, you don't have to worry about it being 1-to-1 or whatever. The assets are always going to equal liabilities. They may have some loans that they give out. It definitely happens with Bitfinex and Tether. There's loans that are going between those companies. And they may be sound, they may not be sound. It's going to be up for you to judge. No, don't be a baby and say you want more regulation for it or all the rest. Just judge it yourself. See if you want to put money on that exchange. But all of that, the point is that everything that exists inside of one of these entities, these third parties, these fiduciaries, which is the old term, these fiduciaries, it's basically they're taking your real money. They take your base money. They take your Bitcoin. They take your hard paper dollars, your hard currency. They mix it up. They try to do, they try to lend it out. They try to get some yield, all the rest. That none of that is criminal. But what they give you in return, whether it's a debit card, check, online banking account, dashboard, that stuff is fiduciary media. It's a representation of what you gave them. It's not 1-to-1. It's not fully backed. It's definitely commingled. It's always commingled. Doesn't matter if it's spot or margin. I mean, do you think when you send money to Kraken, like and you never use a margin, like say you never use leverage, doesn't matter, Kraken, Coinbase, do you think that they have a cold storage wallet with an individual XPub for you individually just sitting there somewhere? Fuck no. There's no individual cold storage XPub just for you with one address just for you that like they happen to manage that for. It's all with them. All of the Bitcoin goes into one, as we know, and as Armstrong said, which is a lot higher than I thought. It's a lot higher than I think a lot of people thought. He said there's 2 million Bitcoin on their balance sheet, which is insane. Not quite sure about that number because other like Glassnode and other people don't have it that high. I haven't read any breakdowns after he said that, but regardless, that's a lot of Bitcoin for one person to custody. But regardless, all of that it's not yours. It's not yours. It's theirs. It sits, once you make the deposit, it sits as an asset on their books. And they have a liability to you to repay it if and when you might want to receive it. And that liability is called a deposit. It is called your account. So again, I know it's a soapbox. I do it every time, but it's like people, these words like these, it's just exasperating to listen to, like commingling, proof of reserves, all this. The only proof of reserve you have is if you reserve it yourself. Like everybody should know that. That's only proof of reserve you're going to have. So if you hold the base money yourself. The one exception, sorry, you going to say something?
No, I was going to say proof of reserves has been a hot topic the last few weeks.
Sure. And it gets sophisticated. I have no problem with people trying. Great. Good on them. Nick Carter's been shouting from that hill for years, and I've been great to try to do something to make it better. And, at every individual depositor can look at something that seems to represent a proof of reserves of their Bitcoin that's hashed, every hour or day or whatever. Kraken does a pretty good job of that, or others, can try, but it's not the same thing. You're still not going to know for sure that those are the liabilities that exist, the only liabilities that exist for that company. I mean, it's at some extent, you just can't do it. It's not Bitcoin. It's not how it works. Only with Bitcoin do you have a fully, I've said this before, Bitcoin balances its budget every 10 minutes. Every 10 minutes, for for sure that, the next block is there. Yeah, okay, you got to wait a few confirmations you've made a transaction, but that's the only thing when you hold your keys and you hold UTXOs on the Bitcoin network. That's when you have proof of reserves. That's when you know that it's your Bitcoin. Nothing else is your Bitcoin. So I understand from a legal perspective why people got to say these things. And of course, if I had money at, one of these exchanges and it went under, I would want to get my money back. And I'm doing air quotes for the listeners here. I want to get my money in air quotes back. But all this stuff about it's my money, you shouldn't have let it out. I didn't know you were lending it out. I didn't know you were doing this, didn't do that. First of all, don't rely on cryptocurrency exchanges terms sheets right now. I mean, this is an early industry. I'm not calling for regulation in that respect. I'm just saying, this is an early industry. They're making money from shitcoin trading. They don't have good cold storage policies, all the rest. But regardless, it's just, I understand from a legal perspective, say it's my money, it's my fund, it's my money, but it's just not. You have to understand that you have a claim. It's an IOU. There's you're going to get in line with everyone else when they go, if and when they go bankrupt. And it's been, a little bit more like when, not than if this year in 2022, but you're just going to get in line. It doesn't really matter what it says on the terms. You may be first in line. Depositors, should and are often first in line in the banking system. And also they have this scam called FDIC insurance in the United States banking system, which is another reason to give people false confidence. But economically, you have no money. There is not, all you have is a claim. You have no money. There is no money there. It's nothing. It's just an asset and a liability relationship on the, it's not fraudulent. It's not it's none of that. I mean, this is not an Alameda situation. I'm just talking in general, how it would work in Coinbase or whatever. But all this stuff, this commingling, did you mix spot and margin? Spot and margin are always mixed. There's no way to determine this. And it's just like you put money into a bank vault. It's always mixed with the bank's loans, which on the bank's books are its assets. There's no, unfortunately, to use an SBF saying, that they are fungible. That's how it works. That's why you have the banking system work the way it is. It scales payments. It scales finance and everything else. So anyway, that's my little, I knew I was going to get on that soapbox.
I love your soapbox rants. I mean, sure. I mean, again, you can beat a dead horse here, but not your keys, not your coins is a saying for a reason.
Yeah. The one exception, which is an exception that confuses people a lot, is a bailment. It's called a bailment. You probably know this, right? So a bailment is a legal term that it doesn't mean a transfer of ownership, which is what everything else I just described is. You put money in a bank, you put crypto, Bitcoin, whatever in an exchange. That's a transfer of ownership. Literally, you went from having the asset to having a liability claim. They have to pay you when you want it back, but it's their asset now. So that's a transfer of ownership. That's how it works in 99% of the banking world. Any financial world, doesn't matter. Also, Coinbase custody is not a bailment. That's just a transfer of. Well, let me go back to that. So 99% of the financial world is a claim. When you put it into a third party, any money, it's a claim. The bailment is a transfer of possession legally, transfer of possession, where you really would retain ownership. But that is so small, and it's not like in legal dispute. The only things that are bailments are there, like safety deposit boxes, where you actually have something that, you go in, you transfer the possession away, you no longer have it, you have an agreement. The thing is physical, it's recognizable, it's usually not fungible, so it's unique. And that's an ancient rule, by the way, for like coins that came into the bank that were sealed and in a bag, and you said, hey, I want you to store this. That became known as bailment. Everything else it was called was a mutuum. A mutuum, it means it's mutable, basically. And it's a mutuum agreement, which basically that came to be called a deposit agreement. But that's what free banking, that's what like the banking system had worked for like 500 years, all the rest. Gold money does bailments. Gold money does bailments. They actually, even they pretty hardcore on their bailments too. Like they have like even cages that are segregated inside of the vault, right?
For individual customers.
Yeah, for individual customers, and it's in your name. That gold is absolutely in your name. The only company I know in the Bitcoin space that does any sort of bailments is Vaultoro, and they do the same with gold, but they don't do it with Bitcoin because it's not easy enough yet. I mean, like even though you think Bitcoin is easy to transfer around, whatever. Again, do you think every exchange has a cold storage XPub with your name on it? Like, they don't have that. It's not, it just doesn't exist. And so anyway, the point being, even bailments, this was the point I wanted to make. Even bailments, like it's great. You may think bailments are great and like gold, hard cold gold bugs are always talking about bailments. It's like, it's my money. It sits there. It's mine. Nobody else can touch it. It's mine. You still got it. First of all, you still got to pay. It's not free. Like a bailment, you would actually have to pay a fee. That's why people don't prefer it, because they don't want to pay the fees. But that's the first point. And the second point is, it's still kind of not your money. Like, It is legally, absolutely, it's a transfer of possession, not a transfer of ownership. That's a bailment. But, what if that vault gets robbed? I mean, yeah, they got to pay for the big doors and the security and the insurance and all that. But what if it gets robbed?
We have, not only if it gets robbed, what if it gets robbed by your government? It happened here in California earlier this year, or maybe last year, recently, where you had a private safety deposit box company which was running out of like a strip mall in California, and they were doing no KYC, no AML on their customers. The FBI found out that, I believe it was like one individual customer was storing funds at that safety deposit box company, and they went in and stole everybody's assets. Like not only the guys that they were targeting, but everybody else that had their assets in those safety deposit boxes.
How are they going to get them back? Or they got to go through litigation?
I'm sure they have to go through litigation. Yeah.
It's unbelievable. It's just, like stealing assets, like interstate commerce laws, all this bullshit they always steal. If you got cash on you, like in, crossing the border or whatever, they just steal it. Regardless, they'll just steal your cash. They stop you. So just be careful of that, obviously. But, this is also, I don't want to get on another tangent yet. And if you want to go somewhere else, that's obviously the push to CBDCs and all the rest. But it's never your money. That's the thing. Even with a bailment where it's technically your ownership, like you said, it's still at risk. It's still at risk, obviously, of threat. But everything else is certainly a claim. And Coinbase custody, by the way, I read their terms. That's not a bailment. That's a trust. That's a trust. So it's supposed to be kind of cool, supposed to be secure and interesting and unique, because even Coinbase doesn't own that. So it's another level, right? So it's a trust. Coinbase has hired a trustee to hold those assets, so supposedly, in more, let's say, less easy to be spent ways, which is a trust agreement. That's all it is. It's just a trust agreement. So they have a trustee, someone else that's not Coinbase, that holds your funds on behalf of you. So there's like another level of trust there. But even that is economically, there's no difference. Like that, it's not a bailment, and it's still a claim. Like you just got to go one level up. You got to go to the trustee. Then, if the trustee loses it, the trustee could, in Bitcoin terms, trustee could totally lose it too. So none of that matters. None of that matters in Bitcoin. None of that matters in finance. 99% of the things. If ever you hear a shitcoiner or someone talking about, well, we're going to get our money back, we can get our funds, it was never your money in the first place. You're in line as a creditor. You got to understand that. You're in a different place than you were when that exchange was operating. You're certainly in a different headspace. Like hopefully you learned you should never put your money there because, you're going to have to deal with the legal costs and the headache and the time and the wait and the time preference to get your cash back. But, there's no difference. There's no difference. So commingling, proof of reserves, all of these terms you hear doesn't mean anything. It's not, yeah, SBF was like low on the totem pole of everything as far as like controls and custody and all the rest and, typical accounting. And yeah, he was running a Ponzi, but, even normal working exchanges like Kraken, Jesse Powell says it right. I mean, that's like, don't hold your money on our exchange. It's not, it's just a liability.
Yeah.
So
we're going to learn.
Yeah.
We're going to learn. I mean, I learned that in like 2015.
Yeah.
The MinPal exchange. Yeah. And, the guy around it just decided to take everybody's Bitcoin and run. It happens.
That was in 2015, yeah?
Yeah, I believe so. 2014 or 2015.
Yeah.
Yeah.
Yeah, and they've had their hacks, a lot of different ones. Bitstamp, Bitfinex, obviously MTGOX, which, again, you can blame it on this, blame it on that, blame it on negligence, but at the end of the day, it's not your money there.
Yeah.
It's just not your money. You're going to sit in line like everybody else as a creditor
And
to try to get something back. And you might not get Bitcoin back. You might get, Japanese yen or I don't know. Like, I mean, you may not get Bitcoin back.
Yeah, that's going to be a very interesting case study. Mark Harpelis was on a podcast last week, and he said the Mt. Gox creditors should be getting paid out at some point in the first 2 quarters of 2023.
Yeah, which is already supposed to be the third quarter of 2022. But yeah, sorry, go ahead.
And they're not getting Bitcoin back, right? They're getting paid out in yen equivalents.
Yeah, I've heard different things, so I don't want to speak on it. But
Okay.
could be. Let's just say it very well could be yen equivalent, and there you go. Like I mean.
And if it is yen equivalent, definitely not inflation adjusted.
Yeah.
So
they
think
make their own rules up, man. It's just like inflation, the price inflation index. I mean, they make their own rules.
Like, that'll be a really interesting case study if it is payback in yen, not inflation adjusted. They're not going to, I doubt every creditor is going to be made whole on the deposits they had on Mt. Gox. So they're already taking a haircut on their deposits, I would imagine. And then on top of that, they're getting yen back, which has been significantly debased over the last almost 10 years.
Yeah.
Fucking learn how to spin up a wallet and hold your own keys, freaks. It's time. Like, that should be the regulation that comes out of this. Like, you should not be allowed to hold claims to Bitcoin on a centralized third party because they've proven time and time again not to be able to actually secure them or follow through with the fiduciary responsibility to manage them properly.
It's going to be more embarrassing hiccups from regulators trying to wade through this stuff. This certainly set the industry back like many years, but just for all the grifters that are saying like, oh, we need even more regulation. Maybe, we just need some good, stable regulations. Like, you do realize that regulations caused nothing but problematic stuff here. They definitely didn't help with the solution, right? Whether it's Madoff or Enron or MF Global, like, it's short sellers typically that find something wrong.
Yeah. We don't need regulation. We need better education about what people are actually dealing with when they think they're buying Bitcoin. Whew. Should we hop into the charts?
Yeah, man. We don't have to go through too in depth. I'm pulling it up, Logan.
Yeah. Yeah, the regulatory grifters, man. We need regulatory clarity. That's why this happened. There was no regulatory clarity. It's like, what?
I can't stand it. No more commingling of funds. Dumb fucks. It just doesn't mean anything. You're saying words that don't mean anything. It's always commingled. All right. So for those that are watching, just very quickly, for those that are listening, I guess we have doing this about 5 years now, I guess. This is the Q3 update. It takes time because usually another month has to go by after the quarter end. We were going to do this in November, and then November flew by for us. So with not too boring of a few weeks here. So finally coming on in December, started December to do this, but this is the Q3. So this is end September 30th. Basically, as I was talking before, if you have base money, which is like in today's financial world, I know it wasn't in prior financial world, like the gold standard world, but in today's financial world, it just means cash and coin and all of the what's called the bank reserves, so the account that each bank holds with the central bank. You add those two things together, that's the monetary base, and that is going to be compared to Bitcoin economically. So whether I hold Bitcoin, you hold Bitcoin and Kraken, whatever. Somewhere those UTXOs exist. Doesn't matter who's holding them, just like somewhere gold ounces exist. Doesn't matter if you're holding them or, Peter Schiff's company is holding them. God forbid. No, company's okay. James Turk's a good dude, but that's the idea. Is basic money is it's something that really it's the ultimate asset. It's typically the match. It's going to be matched by equity. You can definitely lever it up, but if you hold it and you have no bank debt, it's your asset. It's nobody else's liability. It's your asset. It's your equity. It would be the same in any other case. If an institution held it, on the other hand, though, they have the asset and they also have the liability to you. So the moment that you put it in institutions, obviously this stuff gets complicated, but you can still trace it back to the core of the stuff, the thing that it is. So that's physical dollars and bank reserves, which is very similar, by the way. It's very similar to the total assets of the central bank. So, but this is on the liability side. So it's what the central bank owes to the banks and to all of us. It's 26.8 trillion. We got 50 currencies, been doing that for a couple quarters, $26.8 trillion equivalent. And this is an interesting number because about 6 months ago, that number was about 30 trillion. And really, they're printing a little bit less. They're trying to rein it in from COVID stimulus, but not much. Maybe it's about flat, the money printing, roughly. But just that number has come down because the dollar has just been screaming. It's absolutely been screaming compared to every other currency. So that's why it's a little bit lower. It's actually not that they're necessarily printing less. It's just, this is Wittgenstein's ruler. I have to put this in something. I can't it doesn't make sense to put it in Bitcoin because you don't get a number that's more than 21 million. So you can't do that. So it's just sort of the easiest thing is to look at a dollar equivalent. So 26.8 trillion is a monetary base.
We've
the
had
euros actually. Yeah, go ahead.
The yen, the euro, the pound specifically have fallen against the dollar.
Everything, man. Everything. I don't know if I can't remember if I have a chart in this series, but literally, I mean, every currency has just been crushed this year against the dollar. It's changed a little bit in the last month or two compared to the start of the year, but everything has literally been crushed. So, whatever. I mean, these are old theories too, whether you're talking, dollar milkshake or it's the best looking horse in the glue factory. Like this is, at the end of the day, we all know that the dollar is, the world's reserve currency, which most central banks reserve. They're not reserving gold. They're trying to reserve dollar or dollar-based assets. But this is the actual, just the core. This is each central bank's monetary base. So 6.3 trillion euros is the biggest monetary base. Dollar's actually ranked number 3. 97% of global GDP by these 50 currencies, 84% of the population of the world. And so it's about 5.6 billion ounces of gold, which is almost $10 trillion. That's the equivalent amount of gold that does not include industrial gold. And then 19.2 million Bitcoin, which is at the time of writing, it was 0.35 trillion or 350 billion. And even at 350 billion, where you got like 6.3 trillion euros or dollars worth of euro, 5 and some trillion dollar worth monetary base, Bitcoin still it's very It's very Pareto-like. So there's a huge distribution there from the top to the bottom, weighted towards the top 4 or 5 currencies. So Bitcoin really over the last 5 years has snuck up, and it's about the 9th largest currency. If you don't include gold and silver, if you include gold and silver, it's the 11th largest currency. So I don't know. I said we'd make it quick, so that's really the summary. There's just a lot of stuff on here that, I really try to break it down for you. You can see the physical versus the bank reserves. You can see it per capita. You can see how this stuff changes. You can see it. This is another one I don't know. Did we talk about the CBDC stuff? You want to talk about CBDCs or?
Let's talk
or no?
CBDCs. And I'm not being rude, checking a text. I'm looking for a tweet that I want to bring up.
No worries. So here is this isn't the tweet that I wanted to show, but earlier this year, the Bank of Japan issued a very interesting report. And they literally worded, at this point, there are few countries that have a clear use case for CBDC. So the big countries know that CBDCs are awful. All right, CBDCs are a risk to themselves because the central bank exists for 2 reasons. The first is for the state, for the government. It makes the government's bonds look better than they otherwise would be because they can buy them. They can put a floor on them. They can increase the price by buying them with money that they create. And the second is they exist, of course, for the banking system. As most people know, like most central banks, not all central banks, but a lot of central banks are privately held. There's bank interests in the central bank. And of course, the banking system, needs, as we say, lender of last resort. Central bank exists for the bank. So the first is the state. The second is the banking system. And CBDCs just destroy everything there. I mean, it's the central bank trying to act like a normal bank, holding CBDCs and issuing CBDCs and having, apps and technology and all the rest interfacing with the public. And then the other problem, so that's the first problem basically, is that they already do cash, and they do cash quite well. Some countries better than others. Latin American countries in particular like to print a little bit more than they probably should. But it's not a laughing matter. Obviously, as we know, it harms a lot of people. But you have to think that what they're already doing is a huge part of the retail money supply. CBDC is supposed to be retail. So if I show you this chart, this is the physical cash supply of the world. Right now, it's about $8.6 trillion equivalent. 8.6 trillion or $1,100 per capita. And that I literally mean cash money, retail money. So like you think about all the dollars, euros, yen, won, yuan, Brazilian real, everything, pesos, and using black market rates, by the way, if I can. So not helping these central banks if I can, which you shouldn't. I mean, everybody knows the black market rate is typically out there, especially for less well-known central banks. $8.6 trillion, which is still a lot of money. All right. So like I said this at Honey Badger, you may remember, I think Apple's market cap was a little bit under 3 trillion at the time. So about 3 times Apple. But again, like Apple, you think about like all the computers, phones, iPads, whatever. I mean, the market capitalization of that company is $2.7 trillion. This is like cash is no joke. And people say nobody uses cash anymore. Well, okay. But have you actually measured it? I've actually measured it, not on this chart, but it grows. It lasts like 15 years. It's grown at a 15% growth rate. So cash is not slowing down. So that's problem number 1 for CBDCs is you're going to, as a central bank, compete with your own best product, which is physical cash. Now you may say that you want to do it, whatever, for the controls and all the rest, but it's going to be pretty hard, I think, to like population is growing at 1.5% per year, and physical cash grows over the last 50 years by like 8%, about 8%, if I remember correctly. So there's quite a mismatch there, maybe even 9%. Doesn't really matter. The discrepancy is so wide. If you understand, interest rates, you can understand that's a huge discrepancy, huge delta. All right, so that's problem number 1, is that central banks have just a massive stockpile of cash, and people actually do use cash throughout the world, even though in the Western world we don't think about using cash. The stockpile is growing. It's not decreasing. So they got to compete with that with their CBDC. And the second thing is, once CBDCs get into the economy, if they were to get in the economy and actually compete, besides competing with their own physical stock, which we just talked about, what else would they be competing with? What would be their market share of where they could take it from? It would be deposits of the banking system. And as I just said, central bank exists for the state. It also exists for the banks. Why would they want to do that to their own banking system? Like banks, and again, you don't have to take my word for it. This is in every CBDC report in the world, basically, is like, yeah, this could be a problem for depositors. We could see deposits. If we want to have this, it could drain deposits from the system. That is fiduciary media, right? People would take their money out of banks. They would get some sort of base money, maybe they get hard cash for a time, whatever, or they just do the straight transfer into base money CBDC. And once you hold CBDC, well, theoretically, it's great, right? Obviously, we know that's Orwellian and horrible and awful. But if you're a bank, you don't like that at all, because if you've just taken my deposit where I could lend out and earn interest on it, you've taken that deposit out of the bank. I no longer have those funds to lend, and that makes me less profitable. So that's a real issue. Those two issues they know about, they understand everything. That's why the Euro Central Bank is saying in their latest, rumblings on CBDCs is that they'll have, a limit of whatever it is, X euros a day that you can spend, X euros a day, or X euros you can hold in total. We're talking minimal amounts so far, a couple hundred, a couple thousand in certain cases, and that's it. But then if that's the case, like all that is just, it's a whole lot of bureaucracy and, again, Orwellian tracking and all the rest, and systems that have to come in place. Of course, they want it. They want the control, but it's going to be a big hurdle, man. I mean, you got the Bank of Japan right here saying like we're not going into this. They said it. They said it. They gave a report. They said currently it has no plans to issue CBDC, and we find few countries have a clear use case. This is from a top 4 currency, top 4 central bank in the world. Like, people should pay attention to this. And I put in this tweet, like, this was a couple weeks, I think, after this July 2022 report. I put BOJ CBDC. You just get these vomit articles from Bloomberg that like have nothing to do with, digital yen, this stuff from like, a few years ago. No one is tracking that report. So anything that doesn't fit the narrative, as we know, they don't report on. So I don't have as many fears about CBDCs as most people do, but don't get me wrong. It's something to track and keep an eye on.
Yeah. It seems hard. And have you heard the theory that Tom Luongo has really been leading the charge on this, that what we're seeing in regards to the Fed's interest rate policy this year is actually the commercial banking system here in the U.S. using the Fed as a proxy to wage war against the European-centric cabal that would like to push us into a CBDC world?
Sorry, man. Can you say that again?
So Tom Luongo has a theory that what we're seeing coming out of the Fed in terms of raising rates as high as they have been, as quickly as they have been, is essentially an attack on European-centric Davos World Economic Forum class that wants to push us into the CBDCs. The commercial banking system is using Jerome Powell as a weapon of raising interest rates, trying to drain the euro-dollar market and put that banking system in a precarious situation, because they're trying to send a message like, hey, stop pushing the CBDC stuff. You're going to destroy our businesses. And we will use the Fed as a proxy to cause you some pain, to send the message.
Yeah. I haven't seen that particular view, but I certainly have seen, and I certainly have understood that most Fed officials have been pretty cool to the idea. And of course, it's one of these things like, why would they need it? I mean, I did see as well, Powell said, if we do a CBDC, it's certainly not going to be a bearer asset CBDC. He used those words. But then if it's not a bearer asset CBDC, meaning if you don't have the ability to just self-custody, like, I don't know, create your own keys and like you create your wallet where somehow cryptographically you know for sure it's on your phone or your computer or whatever. If he's saying like that's out of the picture, we're not going to do that anyway, then there's no difference between a bank deposit. It's a
same thing.
That would be something.
Name.
Yeah, it would be the exact same thing as a bank deposit. You can say that it's a cool technology that you can cryptographically track better, and maybe it's a blockchain, maybe it's not. And by the way, CBDC does not mean it's blockchain. It could be, anything. So there's just these terms that people are using for it. But my understanding from seeing the people that know the dollars, they know the dollar is the best looking horse in the glue factory. They want to protect it, and they're not seeing the benefits either, just like the Bank of Japan. So it's interesting. Obviously, the euro cabal, as you say, needs a lot of work, a lot of help in a lot of areas, and least of all security. But that's a whole other thing, and we don't have to get into that today. But I could totally see that as a viable strategy, and that's actually interesting too, because it kind of shows that it's not a total global cabal yet, right? Like there's still some competition, even among the central banks, and it's just there's nothing in it. There's nothing in it for the dollar. I mean, by the way, stable coins might take the show. I said that on your show as well, like 5 years ago. I mean, that's the low hanging fruit. That's the thing they want to go for first. And even after the Terra collapse, which was a stable coin, right? Unstable coin. Yeah, it's bullshit. It's all. But the Fed, I think it was Yellen at that time, not the Fed, the Treasury, came out with remarks that were like saying we're going to address this and whatever. And these coins, I mean, like, again, as you talked about earlier, as bad as FTX is and as stupid and probably as insider and elitist and weird as it gets, it's just a dust mite on the the elephant's ass of the dollar economy. I mean, the repo economy, the euro dollar economy, all of it is just massive. You're talking tens of trillions. Repo maybe not that big, maybe like 7 trillion, but the euro dollar economy is probably much, much larger than that. On top of just the regular dollar economy, trillions and trillions of dollars. FTX, 10 billion, whatever. A couple frauds here or there. Terra, less than that. Stablecoin index is maybe 150 billion. Last I checked, I haven't checked in a while. So stablecoins under 200 billion for sure, right? And 150 billion. These are just rounding errors. They're so small figures, and the fact that they are speaking so adamantly against it shows that they're scared of it and shows they don't know what to do about it.
Yeah. So I'm just gonna say I like to see them scared, but I'm happy you brought this up, talking about like large numbers. This is the topic I wanted to end it on. This is a report out of Reuters, which dropped right before we went live here. So we're recording. We'll post this tomorrow on December 6th. So this story came out today, December 5th in the morning, and the Bank of International Settlements has come out warning UK pensioners specifically that they need to begin being aware of this quote unquote blind spot they have, which is an FX swap debt of $80 trillion. So they have like off balance sheet exposure upwards of $80 trillion in FX swaps.
Yeah, I'll have to read it. So obviously this is derivative. These numbers are eye catching, but again, that's a tough one because like derivatives are weird. So that I'm sure that 80 trillion is a notional value. It's a made up thing. It's total value of all future cash flows, but like that can change very quickly. And I'm not saying, like, I'm not downplaying it. It's absolutely a huge thing, but yeah, derivatives are crazy. They don't know how to count them. They don't know how to track them. That's a tough one. That's a tough one. And but regardless, we're talking again how small Bitcoin is compared to this stuff. I mean, 80 trillion. I'll definitely read this, but derivatives are way. I mean, you could have $1 quadrillion of global derivatives. No one really knows, and it's insane. It's crazy.
Well, the question is
this what the legacy financial system has done to us.
Yeah. Well,
Legacy financial system.
Well, I think that's where the big question is.
What is that? So there's a total credit. I'm sure it's M2 plus cigarette. I can't quite read it, but on the right, the green chart, what are the two shaded green boxes on the right? I know one of those has got to be like total credit and or M2. No, you were on it. What can you read it, Marty? The green? I can't read it.
There we go. On and off balance sheet debt, and then on and off balance sheet debt for non-US
for corporates
banks.
Or
for U.S. banks and non-U.S. banks.
Yeah. I wonder what they're defining as off-balance sheet debt. I presume it's derivatives. So,
well, that's is there like an FTT-like situation happening in the traditional financial space where, yes, it's $80 trillion of notional value, but are these banks able to use that notional value as collateral to take out other positions?
No, absolutely. And they absolutely do. They love levering that shit up. So again, it's caveat emptor. Do not believe any of these people. You don't have to custody your own coins. That's the main lesson as always. But not financial advice, of course, but what did I want to just say to this? No. Here's another big number. Is one of the things I'm tracking is I'm trying to reconstruct, which is proving pretty difficult, but I'm trying to reconstruct for these charts and this chart engine that I'm telling you about that I'm going to start doing videos on probably at the start of next year. The M3 money supply hasn't been calculated by the United States Federal Reserve since February of 2006. M3 money supply, they started to cut that off. That was the broadest money supply. It'd give you kind of the best view of the most liquid dollars that were out there. And again, there is a little bit of physical currency, which is base money, which is real money. As far as like real ultimate asset, which no one theoretically can hold that, and it'd be your asset and your equity as well. So that is included as well. That's called M0, and any cash that's outside of the central bank and bank vaults. But then there's all the other stuff, right? So the deposits, money market mutual funds, which is basically like the fiat version of a stable coin. All of the time deposit accounts, savings accounts, all the accounts that companies have, businesses, private individuals, all the rest. So you have these liquid money supply measures. And the Fed is just horrible at measuring this. Like they've changed the definition of M1 due to regulations. It's almost basically the same thing as M2. And so many people have bbeen confused. You might have seen it. Like if you look at an M1 chart, like it just goes like this. And like 2 years ago, it just goes like straight up and then it goes over. They didn't even reclassify it. They didn't make it historically comparable. It's basically, they just turned it into M2 because they changed some regulatory laws. And people think that actually increased that much. It's just, but the Fed is so stupid for like putting a chart out like that on their website. But anyway, they don't, none of this stuff is easy to calculate. And again, I know we're all about Bitcoin and it too, but if you do talk about a liquid asset that is easy to calculate, I'm not sure how secure it is, but a stable coin actually is easy to calculate. So it is a challenge. It is a competitor to the incumbent system. Nonetheless, I want to recreate an M3 money supply just to see how it will go, because a lot of the data is still there. It's still published by the Federal Reserve. It's just in weird pieces. They don't have it. You gotta sort of dig to find it. Eurodollars are not there, so that's a problem. Like Eurodollars are very difficult. We'll leave that aside. But even if I were to do an M3 without Eurodollars, that would still be something. But a big piece of the M3 money supply that is not calculated today, it's not even clear, it's not transparent, is this repurchase agreements. So repurchase agreements are these they can be very short-term or sort of midterm loans. We know that there was a big problem with the repo market in September of 2019, conveniently just before COVID and all the rest. It was kind of a papered over huge spike in the federal funds rate. And it's a very sensitive market. Basically, when all these banks and not just banks, it'd be pension funds, hedge funds, whatever they have, they want to sort of make their capital ratios adequate. They might need to scramble at the last minute to have a high quality asset, which is at least traditionally known as the United States government bond, treasury bond, right? which I like to call, return-free risk, but most people call it the risk-free return. Obviously, we know that's changing everything. But point is, there are repos that the Federal Reserve is involved in. Those are part of the bank reserve amount. It's not the full amount. It's part of the bank reserve. It's part of the monetary base. But then there are a lot of repos that banks are not even. And so those repos, the banks are always involved, and they kind of mirror what the bank is doing. But there are repos that pension funds do, hedge funds, broker dealers, people that aren't able to hold deposits like normal banks. They do repos as well.
Is that a product of the reaction to September 2019? Because I remember the Fed expanded the facilities.
It was high. It was high in the global financial crisis. It spiked a lot, and then it went down, and it was trying to come down. It's actually very flat when that spike happened in the rates. So I don't know the full postmortem on that, but I know that that's another show probably to go through it. But I would say it was at an all-time low, and they were trying, just like they're trying to bring the monetary base down, they were trying to bring the repo level down that the Federal Reserve was involved in at that time, and then the blow up happened. So, they had to intervene again, basically. But it was higher than that. It had been higher before. It's not like it just happened after that. But anyway, the point is, it's screaming again. It's high. They only publish this data quarterly, the one I track. I don't have it off the top of my head. It's something 207, I think, if you, dear listener or watcher, want to actually track it yourself. It's a L207 maybe account, and they track repurchase agreements. But it's all unorganized. Like, they have assets, liabilities, because what the repo is basically is it becomes the security moves, but since we're not, we don't want to double count money, right? So we're not talking about deposits, we're not tying deposits with the rest. We're talking about the security itself kind of becomes like money. It's like, I need to hold the security, so just give me the security. So the broker dealer, someone will transfer the security over. Someone will have the new security, so they have it, but it's actually a liability. That's the repo. They need to pay it back, and the person that gave them the security has the asset. That's a reverse repo. But anyway, it doesn't matter. They're supposed to mirror and match, and it's the reverse repos will always equal repos theoretically. But here's the thing: they have a column on their account in this exhibit which shows like discrepancies in the accounting, discrepancies in the accounting of the repo, because they're counting assets that are reverse repos and liabilities which are repos. And repos are typically which we call as like a new type of, not a new type of money, but a type of kind of liquid money, which is counted. Yeah, it's basically securities that are flowing through the banking system. So we'll end here, but the point is, the max number that I've been counting from this chart of all of those repos is something like, and this does not include Fed funds. It does not include the stuff that the banks are doing. That would be double counting the monetary base. But it's something like $4 trillion. Gets up to like 7 trillion if you count the Fed funds in there in the repo market. It's like 4-5 trillion, but the discrepancy is like 200-300 billion now. So they literally have, hold on, let me just pull it up really quick just to see it. They have on their report a discrepancy between reverse repos and repos that they can't even count up themselves. That's now 200-300 billion. So you talk about, like, just put that in perspective, all right? Trillions in repos. No one knows when that will crash that market again. And hundreds of billions, which they can't even count themselves. And, this drama over this moron with losing 10 billion, it just shows you how insane the financial market really is.
Yeah, that's like a 5% discrepancy, potentially more if it's on the higher end there.
It can be even higher than that. I just want to make sure I give you the right number because I was looking at that just today, actually, for something.
Oh, where did this $300 billion go? Oh, we don't know.
Yeah, it was up to 400 billion last quarter. This quarter was 288 billion, the discrepancy. I wasn't, I would say non-bank, non-Federal Reserve repos, something like $4 trillion, $4 trillion, and 200 billion of that, so 5%, something like that, could be a discrepancy that the Federal Reserve on its own reporting can't even count up the difference, because all reverse repos should equal repos, and they're trying to count this this transaction that occurs between companies to transfer these securities around. These it's just treasury securities, and they can't add it up.
How does that not happen automatically?
Well, it's a legacy system.
Yeah.
This is how do we not know what this gross moron in the Bahamas is doing? I mean, let's just say he's got a cryptographic company. It's like this is why it's never going to work, man. It's never like proof of reserves, all this stuff. I mean, again, I don't want to be too fatalist with that. There's it's always improvements to make, but you want proof of reserves, you got to hold your own keys.
Agreed. Bitcoin does the accounting roughly every 10 minutes. And you can check.
The budget, baby. Balances the budget every 10 minutes.
It's
you don't have to worry about commingling of funds. Which is a stupid term anyway, if I hadn't made that clear.
You hold your keys. You produce an XPub. You send Bitcoin to one of those addresses. And then you just spin up a full node and check, hey, my Bitcoin's still in that address. That's good.
By the way, I know everyone has XPubs and exchanges and hot wallets, but I doubt that they have like a separate ledger for you with a cold storage XPub sitting in a box.
No, it's not happening.
for the cold storage component, right? It's all commingled. There's no.
Just from a logistical standpoint, that doesn't even could you imagine if you have hundreds of clients, let alone thousands, tens of thousands, hundreds of thousands, millions? Like it's just logistically impossible.
It doesn't work that way.
Impossible.
It never has worked in that way with any institution. It can't, and it's not a problem. I'm not saying it's fraudulent. I'm just saying we have an escape hatch now. We have a different way of sort of interacting with the financial world that we never had before, which is incredible.
Yeah, it is incredible. Meeting with you quarterly is incredible as well. I love these reps, and now we have new data to look at and to track.
Yeah. And thanks for letting me show that off. I hope to improve it, and maybe we can revisit some videos next quarter. Yeah,
no, I'm very excited to see where the price is and where more importantly, where the power trend line is next time we meet. Where should we send the freaks?
Porkopolis.io. Porkopolis.io. That is the site. You got the base money updates. The podcast is there. The Crypto Voices podcast. I've literally, for those who've been paying attention, I've been saying this for about a year, but it's finally coming. We'll have this new sort of stream, this new kind of interfacing with my listeners and I guess viewers now. Start doing some videos, so I'm looking forward to that. That's coming start of next year.
Grow your no freaks. Go follow Porkopolis. Follow Matthew. You're going to get smarter. You're going to understand base money better. You're going to understand the global financial system better. And he's going to keep beating the number one rule of Bitcoin into your brain day in and day out, which is the only proof of reserves that you can have full confidence in is holding your own keys. Until next time.
I appreciate it, brother. I really appreciate it. Always a pleasure. Never a chore.
Peace and love, freaks.